Hi everyone, this is Will, aka Dr. Financial Literacy. Again, this is just an update. In the previous video, still going along the path in terms of I've been able to successfully get the HELOC. The HELOC that I have, as mentioned in the title, I have a HELOC, which is a home equity line of credit of 50,500. So for many of you that was along with me starting this journey, I was unable to get a HELOC in December, and then I started down the path of improving my credit through my credit cards, reducing the debt in general to get me to this point. I really like this point because one of the things that I was finally able to do with the HELOC was to be able to pay off one of my mortgages, which now leaves me with two mortgages. So I got my notebook that I initially had starting in December and just going over some of the information and just having a general conversation today as I continue to read the contract of the HELOC, see the terms of the HELOC, and how it can be beneficial. I already see the benefits from it. I absolutely love this thing. I'm glad that I've been blessed to obtain this, and I'm actually using it not just for my own purposes, but also to help some of my clients with small micro loans that I call green lock or GLOC to help them to understand. A lot has been given to me from the community which I came from. So I operate on the community level, the group level, and also the individual level in terms of trying to help others in general. So in looking at January of 2024, I had a salary of $3,364.70. 4 months later, my take home net is 3,390. All right. So I've moved up somewhat in a couple of dollars since I first started. So this was my net in December that I was bringing home, and this is the net that I'm bringing home in April. And I did this just on looking at what I had, look at putting together a budget and trying to improve my credit to get to the HELOC. In looking at this earlier, I had approximately 300 and I think a total debt of $350,000. As of today, without looking at the HELOC and the changes that it's made so far, my debt is at $310,000 over a 4 month period from December 2023 to April 2024. Living in California, my housing expense is about 37% of my take home pay. So when they say that you shouldn't have maybe no more than 30% of your income going toward housing at the current time, right now about 37% of my income is going toward housing. Let's see some of the other things that I have. over the time, I was able to reduce my credit cards. So I knocked some of those debts down. Here I was looking at my tax information. So I got 3 properties. At that particular time, those 3 properties had a balance of about $143,000. That was 3 properties. So that's come down significantly. Oh man. I was paying about $9,000 in taxes for the 3 properties. Insurance to carry the 3 properties was about $3,700 for the year. So yeah, a lot of changes have occurred in general. My taxes have gone up on the properties. Let's see here, what else I looked. Had some credit card payments earlier. I think in the first month of doing velocity banking, I was at a negative. And from here, I think in January of 2024, I was carrying about $1,800 a month, $1,860 in credit card. So yes, I was in the hole. I was spending a substantial amount of my income on credit cards in general. That has changed over time. Also, looking at my credit report during that time, I had a balance of, I think this seems to be a couple of credit cards that I had. Those have been wiped clean. So now at the present time, I'm left with, I think the last time I looked at my budget, about four or 5 credit cards I'm carrying now. I came off as an authorized user, so that I think kind of tanked my credit score a little bit because it pushed up my debt to income ratio. At one point, I think with Experian, earlier, I was at maybe 785 on one of my videos, credit score. When I came off as an authorized user last month, I think I went back to Experian and my score went down to 738. When I looked at the credit profile of me through Wells Fargo, so there was a drop in the points that may have been attributable to coming off as a authorized user and then having the utilization go up at the same time. But I think I'm on a rebound once I look at my numbers next month. Credit card debt. So at one point in this journey over the last few months, I had credit card balance credit card balance. Sorry. Credit card balances of $14,011. with credit limit running 19,900. So you can see that I had a number of high balances from December to April. This was the limit that I had on the cards. This right here amount to the credit card balances. So that could have been also what was holding back my credit. A couple other things looking at okay. A part of the $300,000 debt that I had on the credit report, I still have 100 and about 50,000 student loans, and I was carrying the 144,000 mortgages. Three of those. So that amounted to at least some of the amounted to at least some of the $300,000 that I had in debt. We talked about some of my wages, income. I started understanding average daily balance and really started looking at what was my balances on some of the cards in general. The average daily balance on some of the properties in general. So in looking at the average daily balance, that's what is left every day, or at least every month on your principal in general that they use to calculate the interest across the board. So in looking at my properties, on one property at 28,000, one property at 79,000, one property at 35,000. Sometimes the average daily balance in terms of dollars per day, that was $5.36, $8.16, and $5.89. So when you go back to kind of look at your mortgage or even your credit cards, you can see the average daily balance on your cards. And these are the principals. Okay. So I worked those down because of the HELOC that I was able to obtain. I was able to wipe out this particular mortgage, which leaves me with these two mortgages and consolidated debt to $50,500. Now this included I paid off my car, I paid off the mortgage, and paid off three loans in general. Now, going back to velocity banking. So I started this journey through understanding velocity banking when I didn't get the loan. I was on the internet just looking around and I just started hearing about accelerated banking, velocity banking, both in terms of using a line of credit to reduce your debt. So once I started in January, I just started looking at all my credit cards 1, 2, 3, 4, 5, 6 credit cards. Just say they had different balances: 7,000, 2,000, 3,000, and so forth. Then I looked at their monthly payments, say 150, say 30, say 40 in general. So I had to start thinking, okay, do I have a line of credit? How can I use it? Well, one of the first things I did was identify one of the credit cards that had the highest balance, and that credit card was at 7,500. Now, the principle behind velocity banking is kind of bypassing the checking account. So I used to get paid, go to the checking account, the money sit in the checking account, then I would pay my bills, which included these credit cards. Now, under velocity banking, if you have a line of credit, then you put as much as you can on that credit card, on the credit card or your line of credit to bring down your debt. So what I started doing, this card had a balance of I think 7,596. So I was over the limit already. So when I started getting my paychecks of about 1680, I think a week, I just immediately just started placing them on the debt, let that credit card sit there, and under velocity banking, it would make the payment and I still had access to my credit. There was a little bit of challenge around being able to pay my mortgage and my mortgages and my rent. But I solved that through overdraft protection. So now I figured that out. So without a third party, I'm now putting money in an account and then charging it to the checking account. And then the checking account has an overdraft by a credit card, which pulls it in general. So velocity banking has been, I like it. I like the principles of it. I was in a negative cash flow, so you may hear some velocity banking advocates indicate if you're in a negative cash flow, that can be problematic. So what I do now is I get my check from my employer. My check still goes to a bank under velocity banking until I get that HELOC totally set up. Once my check hits the bank, I immediately deposit everything. At one point, I held back probably about $300 or $400, but now I'm comfortable with velocity banking. I really don't have any an emergency fund. Also, if emergency comes up, then I'm prepared to use the credit cards. But I'm continually using that reserve to pay down my debt and get more bang for my buck. So now my entire paycheck goes from the bank, and I put it onto a Visa card or a MasterCard, whatever credit card has a balance. Right now, I'm working on one credit card that has a balance of $5,000. So what I've started to do is only use that one credit card. So this is that one credit card. So now I only use this credit card that has a balance of 5,000. So when I get paid from my employer, the first thing, it goes from the bank straight here, and from here, I start to pay bills throughout the month. Food, gas, rent, mortgages, in general. Now I'm still utilizing the bank because I still have a checking account at the bank that I sometimes leave maybe $200 or maybe $300 in the bank so that when I write a check for the mortgage, for the rent or the mortgage, it hits the checking account and it takes that and puts the difference onto the card, which gives me a couple of more days in order to pay, and it allows it to sit on the credit card, reducing my average daily balance. So that's what I'm doing now under velocity banking. I wasn't doing it in December, but since January of 2024, I've been using velocity banking to go from my employer to the bank to the credit card to pay bills. So I rely very little on the checking account at my bank. So I leave very, very little there. And the only thing I do is just repeat the cycle. As soon as I get paid again, once the bills are paid and whatever left on the card, it stays on the card. And I just repeat the cycle all over again. From my bank to the credit card to the food and the gas. So this is how I've been paying down my credit card debt. Once this is paid off through using velocity banking, I think I'm gonna be left with two other credit cards, and I'm gonna do the same thing. Once this one is done, I go to that next credit card, and I know that has a balance of $6,100 on it, and then I'll start my paycheck to the bank, straight to the card to make the payment and continue to go on. This system has worked well for me. I encourage you to not just look at my channel, but please Google velocity banking in general. It fundamentally is a different mindset. Is asking you to do more with your money. Velocity banking is I think primarily looked at from the home equity line of credit that I now have. So this is just doing velocity banking with a credit card. This helped me to reduce my credit card debt, increase my score, and then I was able to go back to the lender and say, hey, well, I was in my folder and I was deleting my emails, and um, something spoke to me, said, go back to this lender. I was just about to delete this lender. It was one of 15 that I went through. Picked up the phone, reached out again, and talked to one of the salesperson. We talked a little bit more, told them I improved my credit, and they said, well, why don't we give it another go? So I did a soft pull, which shows up on a credit report, well, that I can only see. And once we did some more analysis, did the hard pull, and it came back that, yeah, okay, there's a lot more potential here. And I ran with it. Now, with the HELOC, and that's where it looks at velocity banking. So it's still velocity banking now with a HELOC. So I did it with credit cards, reduce my debt. If you want to reduce your debt, you want someone to work with, please just give me a call. I'll be more than happy to work with you. So now the ideal is that I get my paycheck, take that paycheck, and now once I get the velocity banking up and running, my regular bank should be replaced with the velocity bank. So now when it goes in, it's going into a bank that is already holding my HELOC. So no more necessarily using a checking account, but I got to be cautious about that. The last time that I was looking for a mortgage or a loan, they asked for my checking account and they wanted to see some numbers and information. So I got to be careful, and I need to go back to see how I may need to show some deposits in general. But with the HELOC, it's going to be held at one particular bank. Now, when I get my check, it's going straight to the HELOC, and then I start to pay down some of my bills. So whatever bills I have left will start coming out of the HELOC. So the first thing that's going to happen is when I get this check and I get it bi-weekly, I'll be putting in, let's just say 1,600 and 1,600 2 times a month. That's going to bring the HELOC down. That's going to bring down my average daily balance. Now with the HELOC, there are some I've heard with a longer draw period, and the draw period is a time that you can take out money from the HELOC. With the HELOC that I was able to be blessed with, I'm gonna have 3 years of interest-only payments starting at $424. Now this $424 a month of interest is calculated on this 50,000. But as this 50,000 comes down to say 48,700, 46,500, then the interest will also fall and the principal will also start to decline. So I got to make sure that all of the money that I'm saving from having the HELOC pay down some of my debt, that I make sure that I keep it in. Before the HELOC, the debt that they paid off came up to about 923. Now I'm only paying or required to pay 424. Earlier I did the math, so it may be off. So about $499 difference. So the question becomes, now that I have this, am I going to take this $499 and just go out and blow it, go out and have fun, go out and enjoy life, or am I going to use it to further pay down the interest on this HELOC? I plan to use it on a HELOC. I live frugal. I try to live below my means in general. So yes, this HELOC to me has been a godsend. As you can continually to follow me and watch the videos, I'll try to put up my numbers to show you how it's working for me. Again, I really like velocity banking. I'm glad I was blessed, even under a 3-year condition, to really draw down to use the money. This is a 30-year HELOC, so I'm gonna have 3 years of interest-only payments, and then it's gonna shift to 7 years of a holding period where I cannot take out any withdrawals. So I really need to work on getting this down and putting as much as I can into the HELOC. So all my bills will go in there, all my notes, all my loans that I have remaining that I can put in general. Now I've maxed it out. So that's going to hit my credit file, I think also. That's going to hit my utilization. This particular HELOC required a minimum of a $50,000 draw. So they gave me 5,500, but the minimum draw was $50,000. So no matter what happened, I had to draw 50,000 from it. There are different HELOCs out there. There are different time frames out there. I went with this one. It was able to get me out the door. The interest rate on this HELOC is 10.25%. It can go as low as 4% and as high as 18%. I have budgeted myself for the 18%. So outside of losing my job, having some illness, I have already budgeted for this 18% HELOC, so it's not going to be a surprise to me. If the feds increase the interest rate and my bank come to me and say, hey, the HELOC may have to go up because of the prime rates, according to the Wall Street Journal, I've already factored in a $700 a month payment. Now remember, I was paying $923, so I'm still below what I was paying in general. And as long as I keep paying down the balance, working a HELOC, looking at that average daily balance, I should be okay outside of illness, losing a job, or something like that. So I wanted to just continue to bring that to you, bring it to the audience, bring it to my clients as I continue to understand velocity banking and be an advocate for velocity banking, increase the financial literacy of various communities in regards to understanding velocity banking. So thank you very much. And again, remember, it is what it is, but it's what you make of it. Have a great day, everyone. Thank you for stopping by.